All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, t.hobbs. Today is January 29th, 2025, year of our Lord, and I believe all of the earnings have reported. Maybe Microsoft is about to report, but either way it goes, I'm done trading. And today was a big day. It was FOMC day, so the market basically consolidated it all the way into the PM session. Had a nice little dip inside of the PM session, rallied somewhat for the FOMC, and then dipped again for the earnings, and now it's rallying at the close. So ultimately, I struck the fuck out today, and I'm gonna talk about it, right? So um, it wasn't a horrible trade or nothing like that. It's just it was a pain. It was a pain. And once I spotted, kind of the low volatility, low volume, and all that stuff, I wanted to be kind of done with the market. So I was done fairly early. It was a red day for me. It was down about $400 or something like that. But I never really talk about my P&L on green days. I really only talk about my P&L on red days because, in my opinion, really learn of anything, right? Like, of course, I can make money, but what happens on the day losing money? Like, what am I learning from those days, right? So, anyway, current conditions, we were in a tight consolidation at the high of the uptrend. I didn't write bearish or bullish because, quite frankly, I wanted to be very bearish up here, but everything that I was seeing was just saying that the bulls were, the bears were toying with their food, or the bulls were toying with their food. And I'm still hoping for a sell down, but it ain't looking good. All right. But buyers continued their assault to the upside and hit a key resistance. However, they were able to balance out below it, indicating price acceptance, which is exactly what we got, right? And the ability to trade higher is on the table. With a huge afternoon catalyst, consolidation could continue until then. Until bears can get below any significant structure, I'll be looking to participate in the stronger uptrend. So when I came into the market, I wanted to be a bear. Like when I woke up this morning, I was like, hell yeah, we're gonna short the market. And I came in and I was like, tight consolidation, right? We're holding the lows. I was like, I really can't short the market. I start trading at 350, and then when I come down here, I'm gonna show you what 350 look like. But essentially what I was looking to do, I was looking to short the highs and lows of the range. Top of the range was 45.048 through 45.096. I don't know why this thing is chopping around. Like, hold on, let me see if I can fix this because it's only chopping around on this particular screen. Yeah, sometimes TradingView acts up on this screen. Okay, that's better, a little better. Anyway, 45,048 through 45,000. 96, 45,012 to 44,948 on the low of the PM session. One thing that I would note is I should have been engulfing this wick with my chessboard. That's something I'm going to fix moving forward. I won't have that problem anymore because I had the level where I thought price was going to go to, and I had it up there as like, hey, we need to hold this high. And when price came up there, I was actually in the long, right? And I didn't take profit directly at that level. I instead trailed my stop, right? Which turns out if price is in a range, I just got so used to when the market rallies, like I get like the 100, 200 point moves with ease. But when price is in a range, you got to respect the range. That's the big thing that I took away from the day is that I didn't respect the range with my profit targets, right? My profit targets should have only included targets within the range. And if those targets got hit, I needed to get out of the trade, not take something off. It's like, no, this is basically a scalper's day, right? And that's kind of why I bowed out. But anyway, we had the previous day low here that always acts as support. We had this little consolidation on the 4 hour that, can hold. I don't like to mark it as demand because anytime we get close to supply, I stop marking demand zones, right? So this level ended up holding because the bulls are just annoying. I had a supply zone area that I wanted to short and a demand zone down here. We didn't touch any of those because we were range bound, right? So let's drop down to the 15-minute and let's see how the plan kind of worked out, right? Let's take this off here and drop down to the 15. Okay. All right. So this morning I trade London, right? So this candle over here is 0 350. I like to trade the 350 4 o'clock macro, right? So I got a little bit impatient because I knew I was going to make money. Sometimes I get a little anxious, right? And that impatience starts to play a factor in when I enter the trade. So I knew that I didn't want to enter. As a matter of fact, this box was a little higher. But anyway, I knew that I wanted to enter close to the daily fib. But when I saw this wick, right, I already got a little shaky. I was like, oh, snap. And then I saw another wick. And, you know, if you're a trader out there, you already know what it is. Sometimes you see that wick and you like, damn, I'm going to miss this trade because this thing's about to rocket ship, right? Don't do that, right? Just remind yourself this is consolidation. You need to get the manipulation, and you prefer that manipulation to come down into your designated area so you then can get a better entry. I'm gonna explain to you why this was very important for the way that I trade, right? So when we came down, I ended up getting an entry at 44,985, which is right here, right? And I put my stops below these lows right here, right? 49, yeah. So I was risking about 30 points, something like that, 30 points. Yeah. No, it wasn't here. Yeah, no, that's where it was. Yeah, that's where my stop was. It was, no, I'm sorry. It was below the daily fib, 44,942. I'm looking at it now. So my stop was at 44,942. So I was risking roughly about 40 something points. It's never about the money when I put my risk on, by the way. Like, if I believe I'm going to win the trade, then I will pay for that trade, right? I will pay that risk. I just look at it as like a loan to the market, right? Like, I'm willing to loan you my points so that I can bring back more points, right? So like the money doesn't really mean that much because I'm trading prop, right? So if I'm trading prop, I've already paid my cash value in, right? So the way that I look at it, prop, like people look at it differently, but the way that I look at prop, I'm paying for the leverage. If I had $2,000 of my own money, I couldn't play the size that I'm playing right now. I would have to build up. But in prop, I could play 2 minis if the account is got $17 left in the account. So that's just the benefit of trading prop. So I'm going to use those benefits to my advantage and pretty much over leverage. Like that's what it is, right? I over leverage because there's no way I'm trading 2 minis with 2K. So whatever, I accept the fact that I over leverage because my risk is managed by giving you guys $50, $100, or $150. But anyway, let me not go on a rant. Anyway, so I put my stop at 44,942. Now in hindsight, right, the invalidation point was 44,893. I normally place my stop at an invalidation point. I wasn't trying to be cute. My thought process was 350 was bringing the low. So when we dipped down here, I was in drawdown for a little while. I walked away. I came back and the trade was printing. This is where I fucked up. The trade was printing back up to the top of the range, and my goofy ass, right? Because I do dumb stuff like this sometimes. I said, you know what? Previous high, previous low. We hadn't broke this high yet, but I was like, you know what? I'm thinking we're going to break that high. So prematurely, I'm going to add to my position at 45,000. So I put a limit order to buy the market here at 45K. Then I walked away, went to go make breakfast, ate a sandwich with my daughter. I thought I was going to come back to straight green skies, baby. My target was previous day high. I was amped. When I tell you I came back just in time for this candle to print, right at 8:30, I sat down in my chair and I said, oh shit, they about to stop me out. And boom. And in came the tilt master, right? The tilt monster. Boom, right then and there. Because when I started to look at it, I said, man, my stop should have been back here at below 894. So that already pissed me off. As I'm getting upset, I'm missing the fact that 850, 830 macro is printing. This was basically another entry. I could have just got into the same trade. I wouldn't have gotten previous day high, but I could have gotten into the same trade, right? And looked to long the market, and it would have been that loss would have been forgotten right away. But instead, I allowed, myself to get distracted by the previous loss. I'm talking about these things for my own sanity, but I know somebody else goes through this, right? Maybe nobody else, is up 66 points in a trade and then gets stopped out for a negative $700. Maybe that doesn't happen to everybody, but something like that has happened to you before. And I think it's important for us to share those experiences, not because I want you guys to do the exact same thing. No, this is how I plan to fix it. From now on, Rule number one, I have to wait for the macro to print. No matter how good this consolidation looks and how early I might be or whatever, it doesn't matter. One, I have to wait for this macro to print. Two, shout out to Valdez because, you know, I'm in his Discord, and one thing he put in there, something that I know, but sometimes it's good to hear it from your peers or whatever, right? Trust your levels. The market's not at my level. I shouldn't be entering this trade anyway. The reason why I'm bringing it up is because I got an entry at 985 and I was risking 40 points. I was really willing to risk 40 points, which is equivalent to about $400, right? But think about if I would have just waited for my levels or the area, right, to hit. My level was daily fib. Daily fib set at 948. The low of this candle, right, is 950. That's 2 points off my level. If I just wait for the market to come near my level, right, inside of the macro, that's a double confluence. Now I get the entry somewhere in this wick at 961, and I give myself 40 points off 961. I'm never even getting stopped out. My stop is at 920 now. You see what I'm saying? Just that simple, patient ad, right, made the difference in me making 700 or 1500 bucks, right, and me losing $700, right? So make the adjustment when you lose. Don't try to say I'm good when I win, right? When I win, I barely even talk this much in the video, ever, right? When I win, it's just like, yeah, I took this trade, whatever. When I lose, it's more important to dive into the loss, right? This loss was completely avoidable, right? If all I had to do was stick to my rules, my entry criteria, and I win this trade, guaranteed. Give me 1 second. My wife is calling. Hey, what's up, man? Okay. Okay. Okay, so sorry about that. I got a phone call from my wife. So essentially what I'm trying to say is review your losses way more in depth than you review your wins, right? Your wins, great. You feel euphoric. You be like, yeah, I know I did this and I did this. It's like, yeah, cool. But your losses is where you can get more efficient, right? This trade was supposed to be a winner. No doubt about it. It was a winning setup. I did everything correct except when it came down to actually entering the trade. The setup was perfect. Nothing needs to change about that. The entry criteria was a flaw of the operator. I am the operator, right? So I got to take full responsibility of that and make sure that I'm doing the right thing. Anyway, the pre-market plan worked out really well, right? We were able to take longs off the lows here, target the highs, right? And then when I didn't take the longs here, I actually ended up getting a long off the retracement, which again, if you're in a range, never take a retracement trade in a range. Again, when I did that, after I took that trade and I only made like 50 points, I closed the market. I closed everything because I was like, I'm doing things that I don't even do. I don't trade retracements. I'm a reversal trader. If I miss the reversal point, then I wait for the next reversal point. I don't trade retracements. So if you catch me trading a retracement, just go ahead and tell me, Hobbs, go ahead and turn it off, bro. Lock it up. You're done for the day, right? So anyway, I took this retracement, understanding we were in a range. I still took the retracement. It went up 90 points. And I knew that this area up here was resistance. And still, I was trailing. You know why I was trailing? Because my greed now is kicking in because I'm playing from behind, right? I was down 700. My thought process was, let me at least get back to break even, but let me lock in 50. I was up 90 points, right? That was basically 700 bucks right there. The greed started to kick in, right? So, well, not 700, it was like 450, right? But the greed started kicking in and I let that go. It only took 2. And I was like, you know what? I'm gonna just walk away with a small red day and then go, think about what I did. But anyway, ultimately, this was a snooze fest. but the market did exactly what we anticipated it doing. We failed to break above the high of the PM session range. This is a breakout fake out, right? You get the retest right here at 125. You short the market straight down. This was a tough hold, trust me, because this 11 o'clock candle, these are 15-minute candles. From 11 to roughly about 12:30, so an hour and a half, this market just chopped around, right? Just trying to fish for liquidity. Until finally it got the breakdown, and your target should have been here at 895, but the market ended up trading all the way down to the previous day low. And as far as like where we're going the rest of the week, man, God only knows. I can say we broke structure on the smaller time frame, but we continue to find more and more buyers, right? So up seems to be the direction. I really needed to see the bears take over at these highs, and they just aren't showing up to the party. And it's been like that for the last year and a half. So I don't know why I'm surprised. I guess I'm more disappointed than surprised, right? But shout out to Trading Yoga Girl. She put together a really nice plan for the S&P 500, and Jay Seals as well put together a really nice plan for the S&P. Essentially, both of them were looking at these highs as saying like, hey, this is the no-no zone. We get up here, we're looking for shorts, right? And then they were looking at these lows. I think it was daily fib. Yeah, Jay said he had an area on the tape where buyers stepped in, and it lined up with daily fib. So he was looking to participate in price here. I mean, when we got down here, I mean, it was, again, straight up chop fest. The market wanted to tap down all the way into, and if Yoga's in here, I'm pretty sure she is, it wanted to tap down into the low of the dealing range that we spoke about earlier today, right? So like, if you find a fair value gap, which we'll discuss as soon as I get off of this, near the dealing range, you definitely want to mark that out, right? And we'll talk about that as soon as we get off the recording. But the S&P 500 follows structure to the T. The only thing is you needed to be in, and I know Jay don't fuck with these early morning trades, but you needed to be in at like that 7 a.m. And then if you wanted the continuation, you got the continuation inside of New York straight down. But again, from 9:30, I mean, God, ES was a trash. From 9:30 to roughly about 12:30, 3 hours, it chopped around from the high of 60.90 down to roughly 67. So it chopped around for 20 points until finally it pulled back up, retested all of that, and then finally found sellers like 2 hours later. So only for the buyers to come right back up and take us right to the low of the range. So again, as far as continuation, I just don't know, guys. Like, I'm looking at this as way more bullish than bearish, because the bears on a higher time frame, they just aren't accomplishing anything, right? And then there's the freaking monster animal of them all, the NASDAQ, right? I did not write a plan for the NASDAQ. However, I always draw levels, chessboard, previous day high. But the one thing I'll talk about on the NASDAQ, right? And I'll turn off these macros real quick so you guys can see it without all the mess on my charts. But the one thing that I'll say about the NASDAQ is, if you don't have, and I'm not trying to make nobody learn about NWOGs or whatever, you trade how you want to trade. But I swear to goodness, December 22nd and January 5th's NWOG, I've been saying it for 2 weeks. These two NWOGs, for whatever reason, the market cannot figure itself out between these two NWOGs. Every time we get between these two NWOGs, we just get a straight chop fest, right? We get above them, we come back into the range. We get below them, we come back into the range. And then it's just all of these dirty wicks in between them, right? Other than that, I mean, the NASDAQ basically did the same thing. I wish I would have shorted it this morning, honestly, as opposed to shorting my instrument. I mean, all instruments are mine. I'm gonna stop saying my instrument, right? Like, if I know how to trade it, I'll trade anything, right? But 350 on the NASDAQ and the S&P was super duper clean. Like, it was perfect, right? And I saw it, I just was like, I'm gonna stick to my instrument. But man, when I came back and seen this thing melting, I was like, dang it, I should have just traded the NASDAQ, you know? So it's just little things like that you know, that bother me throughout the day. When, if you guys trade every day, you know what I mean? Like, taking losses can be something that destroys you, or it can be something that makes you stronger. Talking about it out loud helps me get through it, and it makes me grow stronger from it. Tomorrow is back to the grind. No difference. Shake off that loss, come back to the market, do the same shit I do every single day. And I hope you guys do the same, because consistency is actually the key to success. That being said, this is the market review. My name is T. Hobbs, and I'll catch you on the next one, man. Peace.